as the price goes up, it really solidifies that. It becomes the new gold for a lot of the older generation that only know gold. So I think that crossing line is probably in the 300 to 500K range, or you know, the 0.3 to 0.5 range. And that is the point at which I think you go run up to the 1 million range. It is tens and hundreds of billions of dollars that are all going to hit Bitcoin. And it's all going to hit very, very quickly.
Welcome to our channel. Today, we're diving into an insightful discussion by Samson Mow. Samson Mow begins by emphasizing Bitcoin's historical tendency for rapid value appreciation. He cites the example of 2017, when Bitcoin's price skyrocketed from $1 to $20,000 within just 9 months. Notably, this dramatic increase occurred without any significant external catalysts, such as major regulatory changes or substantial institutional endorsements. This trend highlights Bitcoin's inherent potential for swift and substantial price surges, driven primarily by market dynamics and growing demand. Mow moves on to discuss the impact of institutional investments on Bitcoin's market value. He notes that the introduction of Bitcoin ETF and the influx of institutional money, including funds from pension and insurance sectors, could inject tens or even hundreds of billions of dollars into the market. This massive influx is expected to drive Bitcoin's price significantly higher. Mow introduces the Veblen effect, where the perceived value of an asset increases as it becomes more expensive, thus enhancing its desirability. He posits that once Bitcoin's price reaches the $300,000 to $500,000 range, it will achieve a status similar to gold, attracting even more investment from nation-states and large institutions.
Bitcoin can go up very rapidly in a very short amount of time. We've seen that time and time again in the past. So there are multiple periods of time where Bitcoin did a 20x. The one I look at is like 2017. Over a nine-month period, it went from 1,000 to 20,000. And that's really no fundamental change, right? Nothing happened on a massive scale that was super bullish, like ETFs, unlocking so much capital into this ecosystem. It just kind of did its own thing over 9 months and 20x'd. So with this sea change in capital being able to be allocated to Bitcoin, you have institutional money coming in, you have pension fund money coming in, maybe insurance fund money coming in. And we've talked to some of these people too. It is tens and hundreds of billions of dollars that are all going to hit Bitcoin. And it's all going to hit very, very quickly because there's many effects at play here. One is the Veblen effect. As Bitcoin becomes more valuable, it becomes much more valuable because it's seen as a legitimized asset. And you can say that ETFs already made Bitcoin a legitimized asset, but as the price goes up, it really solidifies that. It becomes the new gold for a lot of the older generation that only know gold. So I think that crossing line is probably in the 300 to 500K range, or the 0.3 to 0.5 range. And that is the point at which I think you go run up to the 1 million range, because at that point it's the new gold, and everyone wants a piece of that new gold, especially nation states. The thing is, we do know what it looks like. You go and look at the Bitcoin chart on log scale. That is it right there. Yeah. It's right in front of you. But the thing is, people don't seem to understand it based on the same set of data that's being presented to us bulltards, right? So we look at that data and we're like, holy shit, that's so bullish. Someone else looks like it and goes, well, that's not really... there are diminishing returns, right? Or even the ETFs. I look at the data set from the ETFs hoovering up all of that Bitcoin, like 10K a day at this massive rate. And I'm just constantly amazed that it's still keeping up. And you give that data set to someone else and they're like, well, it didn't go to $1 million a coin already. So obviously it's not going to happen. So it's really kind of weird how people look at things through their own lens of the world. And that hurts you in the end if you're a bull, or if you're a bear. Well, the thing is, you just gotta look at another chart in another country. Go look at BTC USDT price in Turkey.
Mm,
They already have Omega candles there, like almost Omega candles, right?
mm,
It's like I saw 80K, 90K Turkish lira candles. So it is possible. And I think you just have to understand it's also a function of the failure of the fiat system too. And that is only going to accelerate over time. Either they're going to maintain the current interest rates or they're going to drop them and turn the printer back on. But either way, it's inevitable that the fiat money will become worthless and Bitcoin is going to skyrocket. And just going back to that Veblen threshold there, we as Bitcoiners already talk about this when people say, aren't you going to sell for profit? I think at that Veblen threshold is when the big holders of trillions of dollars, hundreds of billions of dollars, are going to understand sell for what? The same concept that we understand. Like, yeah, we could sell, but for what? Right? And that is when it really kicks off. Yeah, there's just going to be a point at which people don't sell because what are you going to buy? There's really nothing better to buy if you want to store value. And if you're a big corporation sitting on cash, you have operating cash flow like MicroStrategy, maybe you can sell a little bit to invest in R&D, but by and large, your operating cash flow should actually allow you to net accumulate Bitcoin on an ongoing basis, just like MicroStrategy. So I don't really see like people buying, companies buying or Apple buying at 0.5 and selling at 1 to make a bit of money, because at that point they have to understand, or somebody in the company has to understand, like that's not a smart thing to do, to take profit, if you will, out of Bitcoin. Apple's sitting on $1 trillion of cash plus, so it's not really hard for them to make that decision once Bitcoin hits that threshold. Maybe you can call it a Veblen threshold, where it is now the standard of money. And from there, you just double from 0.5 to 1, right? And a doubling is not hard, especially when we can 20x. And it also ties into the concept of this monetary change being a step function. So it's not like we have a marginally better gold or a marginally better dollar because it's digital now. Because you could digitize dollars into a CBDC. It is massively better at the scale of 1,000 or even infinite. So it is not going up like this to adoption as money. It is just a point at which you jump up to the next step and then you don't go back down.
Mow discusses the concept of the Veblen threshold. He suggests that major institutional holders, such as corporations with substantial cash reserves, will reach a point where selling Bitcoin for profit no longer makes sense. This is because, at that threshold, Bitcoin will be regarded as the premier store of value, surpassing all other assets. For example, companies like MicroStrategy, which have significant operating cash flow, will continue to accumulate Bitcoin rather than selling it. Mow believes that once Bitcoin reaches a certain price point, even companies like Apple, sitting on vast cash reserves, will find it logical to hold Bitcoin as a primary asset. Mow introduces the concept of a step function in Bitcoin's monetary adoption. Unlike gradual adoption, this step function signifies a sudden and significant leap in Bitcoin's acceptance and value. He contrasts this with the digitization of traditional currencies, like central bank digital currencies (CBDCs), which only marginally improve existing systems. Bitcoin, on the other hand, represents a transformative change, offering a superior alternative to fiat money. As Bitcoin's adoption as money reaches a critical point, it will experience a substantial jump in value and acceptance, cementing its position as the new global standard.
Bitcoin was still at the 30s, low 30s range, and that is already drawing attention to Bitcoin, and people want to start formulating a Bitcoin strategy. So when Bitcoin is at 100, I think we're going to get a lot of phone calls, and the phone's going to be ringing off the hook. But yeah, the main things I think from these trips last year are that we can tap into energy in these countries and do something very quickly in the near term, in the next couple of quarters, and show how Bitcoin can benefit them directly. So in Suriname, there is a project deep in the Amazon jungle where we can install a mining operation in the village to help them get more electricity, and to potentially monetize the Bitcoin they mine there to build up more infrastructure for that little village. There's also a hydro dam with excess power in Suriname, and we're in discussions to see if we can use that excess to mine Bitcoin, and then they can use that Bitcoin for whatever they like to benefit the country. In Colombia, there's a flare gas installation that we've been talking about, and the president there said, you guys should get on this and do something fast. So we just have to get back to all of these discussions and kind of, cross the T's and dot the I's and get these projects moving along. But I think it's going to be much more busy for us in 2024 with Bitcoin going to the moon and all of these countries starting to take an interest. We do try on all angles. While mining is probably easier for the governments and the presidents and prime ministers to digest, we do still try to present the other option, the El Salvador route, which is taking some legislative measure to embed Bitcoin into that country in a more firm way. So Panama is interesting. They have no central bank. The next president there can simply say, we accept Bitcoin. And there's no need for any regulatory legislative change whatsoever. Guatemala also has the capability of doing that if the president there chooses to do so. So they have a law, an old law called divisas, which actually allows them to use any foreign currency as their own money. So basically the president would just say, we accept Bitcoin now under this existing law. But there are a lot of these laws that can be used. Someone just has to go and work with people there to uncover them and push them forward with the current administrations. And then you can get the El Salvador effect without having to pass some new law or new legislation. And actually Suriname also has the same opportunity. They have their own dollar there, but they also use the dollar itself and euros in daily life. So if you go to a restaurant, a lot of the menus are priced in dollars too. And the way they achieved this was they have executive orders from the president saying you can now use dollars and now you can use euros. So we've been in discussions too to see if we can pass an executive order because Bitcoin is a foreign currency. It's the money of El Salvador. They could do the exact same thing and just simply say, here's a new executive order. You can use Bitcoin now. So there's a lot of this low-hanging fruit to implement Bitcoin as money in these countries. And we just have to go at it and work with them and see what we can accomplish.
Mow shares insights from his travels and interactions with various countries exploring Bitcoin adoption. He highlights the potential for Bitcoin mining operations in countries like Suriname and Colombia, which can utilize excess energy from hydro dams and flare gas installations to mine Bitcoin. These initiatives can provide economic benefits and infrastructure improvements to local communities. Mow notes that 2024 will be a pivotal year as more countries express interest in Bitcoin, leading to increased adoption and strategic projects. Mow discusses the legislative and regulatory opportunities for Bitcoin adoption in different countries. He mentions that countries like Panama, Guatemala, and Suriname have unique legal frameworks that could facilitate Bitcoin's acceptance as a currency without extensive regulatory changes. For instance, Panama lacks a central bank, allowing the president to declare Bitcoin as an accepted currency without legislative hurdles. Similarly, Guatemala has existing laws that permit the use of foreign currencies, enabling a straightforward adoption of Bitcoin. These examples illustrate the potential for swift and effective Bitcoin integration into national economies. Please like and subscribe my channel.